Okay, class, in this video, I'm going to walk you through question 10 because you will have to understand these journal entries on your exam. When you purchase books on account in this problem, that is going to be part of your inventory. You're going to debit inventory and you're going to credit accounts payable because you're purchasing. We're going to debit inventory because it's an asset that increases when we purchase more of it. And we're going to record the debit for the full amount of this purchase. We're not going to worry about the discount terms until we find out if we have paid for this inventory in the time frame of the terms. Remember, this first number tells us we have a 3% discount that we can take if we pay within 10 days. So the next question, I'm going to record that journal entry. The next part says record payment for your freight cost. Your freight cost is your shipping. Since we're paying freight on the product coming in on our inventory, we're going to debit inventory instead of a shipping cost. We're going to debit inventory because we are paying for shipping to get the product to us. It's the same concept we learned about in chapter 7. Cost of your shipping goes into the asset. I'm going to credit cash because it says I paid it. Then I'm going to record this entry. Third, it says we return some books. So that's just going to be a reversal of the first entry. We're going to debit accounts payable to reduce our bill, and we are going to credit inventory. It's just, again, a reversal of the very first journal entry. So I'm sending back inventory. I have to credit inventory. Now, the next journal entry 4, record full payment due to the readers. I'm actually going to have to look at a couple of transactions here. I'm going to have to look at the first transaction where I purchased the books, and I'm going to have to subtract the part that I returned. So on mine, it says I purchased books for $2,800, but I returned $300 worth. So now I only owe them $2,500. So that is going to be my debit to accounts payable. I am going to credit cash, but I need to look and see if I have to credit cash for the full amount or if I'm going to be taking advantage of a discount. It says May 2nd was the time frame of when I purchased these books. If I pay within 10 days, so that would be by May 12th, I can take a 3% discount. It says I am paying on the 10th of May, so I am within the 10-day time frame. So I'm not going to credit cash for the full amount owed. I'm going to credit cash for 97%. I'm going to take a 3% discount. So what you're going to see is a credit to cash, but not for the full amount. I'm going to reduce my credit to cash by 3%. So what it's going to look like is I'm going to take $2,500 and I'm going to credit cash for 97%. That would be a $2,425 credit to cash. The discount is going to be a reduction in the price of my inventory. I'm not losing inventory here. So the 3%, if I take 3% of $2,500, it's $75. It's going to be credited to inventory. You're going to credit the inventory account on that discount because it's costing you less. You want to know the true cost of your inventory. Credit cash for 97% on mine. If your discount were 2%, you would credit cash for 98%. The inventory is credited for the discount amount. I'm going to sell the inventory. This should have 2 journal entries. The selling of the inventory says all of the books purchased on May 2nd were sold on account. So that amount in the journal entry here is what I'm going to debit accounts receivable and credit revenue for. Debit accounts receivable and credit merchandise revenue or It wouldn't be a service revenue, a sales revenue is a good choice here, not deferred. So let's try that again. Sales revenue. This is what we're charging our customers. $3,500 is what we're charging our customers. When we sell the merchandise, our inventory, we're going to sell it for more than what we paid for it. The next journal entry has to be you recording the value of your inventory when it went off your shelf. So the debit to cost of goods sold and the credit to inventory. What I want to do on my calculator real quick is show you what the value of my inventory says. First, we purchased inventory, so we debited it for $2,800. And then we paid shipping cost. We debited inventory there. So I'm going to add that cost in. Then we returned $300 worth of merchandise on the 5th of May. And then we took a discount because we paid within a timely manner. So this is the total of my inventory value, $2,575. That is what I will record, $2,575 on the last journal entry to show the cost of goods sold being debited and credit my inventory. Check my work so you can see it on the screen. I'll scroll up and down throughout there so you can see those journal entries. We purchased the inventory on account in the first entry. We paid shipping or freight in on the inventory in the second journal entry. We returned some inventory in the third journal entry. Then we paid for that inventory, but we took a discount on it, and that was a credit to inventory. And then we sold the inventory. We're going to have two journal entries there, one to record the revenue and the other to record the value of the inventory, the cost of goods sold. The last part of this question, it's linked to question 11. So I'm going to go to that one next. You can see it has all the same information, but it says assume that payment is made on May 24th instead of May 10th. When you do not pay within the discount period, mine was a 10-day window for the discount period. What I'm going to record on May 24th is just going to be a debit to accounts payable, the amount I owed, and a credit to cash. There will be no discount involved in this journal entry. But this time it's going to be for the full amount of what I owed. What I owed was $2,800 minus the $300 worth that I returned of inventory. So this would just be for $2,500. Record that entry. Check my work. Please contact me if you have questions.